So what do we do with this knowledge? Well, history reminds us that once a bottom has been put in place, and we think there's a good possibility that that has occurred, then investors tend to want to rotate away from the defensive sectors that held up well during the market decline, because these three sectors gained an average of 24% 12 months after the bottom versus 34% for the S&P 500 itself. The three best performers during the decline beat the market in the subsequent 12 months only 20% of the time. Yet the three worst sectors during the decline posted an average gain of 43% and beat the market 75% of the time. And the worst 10 sub-industries were up an average of 61%, also beating the market more than 50% of the time. So with that, basically indicates that, yes, this market has taken us through a very challenging roller coaster ride, and for good reason. We think that we might have established a bottom in this sell-off. We're looking at a lot of indicators of bearishness that we think were overdone. And so now the question is, what happens next? But we remind investors optimistically that when we have bottom, that 12 months later, the market tends to recover quite quickly what it has declined. And we tend to move into those sectors that were the worst performers during the decline because they have the greatest upside potential in the recovery.